Okay, good morning. It is October 21st, 2025. Some of the biggest market moves I've ever seen in history right now on the downside for silver specifically. Gold's also getting hit. A lot of people are going to be talking about that. That's not what we're going to be talking about. We want to bring you something else that's going on in the underbelly of the market that um, not everybody's going to have the data on, but we do because we're the largest independent bullion dealer in the US. So I saw a screenshot yesterday, Cole. I just wanted to bring you on and ask you about real quick because I think it's interesting. I think people should know about it. And that is, I'm looking at one of the largest wholesalers bid and ask sheet in the US. I'm seeing random year Silver Eagles on delay, 7 to 10 days. That's with Maples, that's with Britannias, that's about with every major bullion product. 7 to 10 day availability. Other things say live, so I can obviously ascertain the difference here. So I guess what's happened, what is going on in the physical supply chain right now? Why are major institutions delayed on the most popular bullion products in the world right now?
Yeah, it's a great question because we've had all these people looking to sell back as the metals have gone up. And so there's clearly a lot of metal available in some way, shape, or form. But then we look at what's available on wholesale offer sheets, the biggest players that hold the most inventory, or even from mints that are making new inventory. And there's really nothing available, certainly in the short term. I was looking at a couple of sheets yesterday. I could pull them up and rifle through them. They're all going to be the same, sold out in all caps on pretty much all gold and silver items, save for maybe one or two, which is really kind of bizarre to contrast that against all this
Hang
metal's
on.
been
So
coming
so hang
online.
on. Sorry, because like sold out's kind of a big deal.
Yeah,
So hang on. So we're not just silver. We're talking about gold, and you're telling me basically major wholesalers, the people that back a lot of the part of the U.S. supply chain. Uh, you're saying sold out of. You can't buy major bullion products from them right now to sell.
correct. It's you can try to buy it. It's just not going to ship to you anytime soon.
Mm.
Like not within the next couple weeks. So we're filming this on or recording this on the 21st of October. So we let's say it would ship out first or second week in November, and then we're kind of looking. You already done the as people that are running the business at Black Friday. That always kind of causes delays. So we've seen this global surge in demand. We talked about this some earlier off the call. What's come out of India, China, of course, been has been a major taker. I saw some videos in Australia, people
Yeah.
lining up around the block. So there's this worldwide demand in the UK. We talked about this some last time, but there was a quote from a major, maybe the biggest UK player, saying, "There's no price you can't give me that I would say no to," which has been interesting. That's just an indication of global individual demand. And so the question was always, when's that going to impact availability and premiums in the U.S. market, which had been kind of quiet. And we said this last week that it was basically hitting at that time, and now it's in full swing. We're starting to see the first couple signs of, we don't have it, we can price it for you, and we'll ship it whenever we can. By the way, our shipping team is backed up. So even though it may be on the shelf in 10 days from now, that doesn't mean we're shipping it 10 days from now. And so what that really boils down to is there's just not that much metal available. Certainly not much metal that's live that's available. So if you do see it available on SD Bullion, I would say go ahead and get it because we're busy too. We're a little bit backed up on shipping. We're working hard on that, kind of flexing people over. But this is the early stages, and we've seen these cycles before in the early stages of supply crunches. What eventually can come if demand persists, which is 4 to 6 week delays on inventory on everything. And we'll get into it a little bit, but the question would be, well, sovereign mints, all the major sovereign mints that
Yeah.
produce all the coins, wouldn't they be able to produce?
Right.
And the answer is yes, they can, but they're backed up about a month. We're on waiting lists with several of the biggest ones, and we're a month out on receiving product because lease rates go up means no one wants to plan to produce anything. They don't build their silver pipeline or gold pipeline really to make an excess amount of inventory in the short term to service demand that they think is going to come in the next week or two. They say we've already gotten stung a few times on lease rates pinching us on the bottom line, so we're just going to make it if someone puts in a firm order,
Yeah.
and it's all too slow. That's
Yeah, I would
that's
say
not good enough.
that's one of the biggest differences that I remember from the last few times that we've dealt with this type of market is we didn't have the lease rate issue to where it's almost unaffordable and unprofitable for these major mints and refineries around the world. I saw a quote from Argo Horaeus basically saying they weren't taking on any additional silver unless it was already contractually spoken for in the past. So I guess you have obviously that shortage, which we covered last week, to where it's hard to get new silver in the market. But are why are the shelves of the major entities of the US already out of gold and silver bullion just with I mean, September was a strong month for sure compared to the previous months this year. But how does this happen so quickly? Why is there no silver availability on the shelf and gold, I guess?
Yeah, great question. The physical market, in short, is smaller than it generally feels or
Mhm.
seems. There is a lot of metal, but in the face of a big demand wave, there's just not near enough metal. And we've seen that multiple times over the course of the last 5 to 7 years. Yes, people have a lot of inventory. They're saying, I got all these presses that can make rounds and bars, and they're just waiting for me to turn them on until we see a week or two of high demand, and then they're out. And so it's been, we have a lot until we don't have near enough, because whenever the
Yeah.
metals market heats up, it doesn't go up 30% or 40%. You see demand across the world go up 10x, 15x. And so there's just no real opportunity for people that are in the market, no matter how you try to plan your business, to actually be able to meet 100% of the demand that you think you have. And so the shelves are out because people have been getting killed on lease rates. It's way too expensive to hold
Yep.
inventory. They're taking a bath on the P&L. So what do? You just carry less inventory for an extended amount of time. That's the solution. Until there's a bunch of demand, then you're like, well, we could sell this 10 times over, but nothing's there. We already went and melted it, or we just made sure we had nothing available. So everyone's in line to buy what they think they can, and there's just nothing really available necessarily. And the mints are saying, great, we'll accept that order, but it's going to be a month out. And then premiums go up. We've seen premiums just on Silver Eagles go from the mint cost is $3. Now they're close to $7 over, so that's 15% a spot. With
Yeah.
silver down, $4 this morning, which is in a short amount of time, that's a drastic move. Usually, a move of 15 to 20 cents per coin is a big move. So, and it's up more than 3.5 or $4 per ounce. So we're going to continue seeing this. If you don't already have something in a supply chain that's baked in, that's planned for, you're not getting it.
You're behind.
we
Yeah.
we
Yeah.
we tried. There was a major wholesaler who just wouldn't. They closed down their portal last week, and they weren't accepting phone calls. AKA, you can't place an order with them. That's major.
That's
We
problematic. Yeah.
we work with, like you said, some of the biggest Swiss players, and we were looking to coordinate an order yesterday, and they said, okay, we can maybe accept this one for some gold bars. We can maybe accept this one, but if you're going to want any more for the next little bit, you better tell us now, or else we're closed up. We're
Yeah.
we're fully occupied, which is really difficult and fun and intimidating all at the same time.
Yeah, I guess, yeah, and this is probably where we should talk about the difference in SD Boying and kind of how most other businesses operate. Most other businesses are going to operate on financing to where they take a position in physical and they offset it in the paper market by shorting, right, whatever metal that is. And then as lease rates have gone higher, as interest rates have gone higher, they're trying to reduce that amount of inventory to meet supply and demand at that moment, right? And then this kind of fireworks happens and boom. SD Boyne is very different in the fact that we don't hedge anything. That's why we are inventory flush, because we just buy inventory, we consume inventory, we hold inventory. We're not worried about the long-term downside of the paper price of gold and silver because we believe the physical is always going to win in the long run. So that's why we're a little bit different. But at the same point, with all the demand coming in, and on a day like this where silver's down 8% and gold down almost
Yeah.
6% now, we're going to see a massive amount of retail demand come in. And at some point, we're going to have new inventory from somewhere
Yeah.
where we don't make it. All the people that do make it, that's who we're always working with to get more inventory. So I guess the question is, do you think we're in the beginning phase of this, or do you think we're in the middle phase? Obviously, we're not at the end.
I think we're in the early stages. I don't think this demand wave is going to slow down anytime soon. Whenever the dominoes start to fall on metal availability for shipping, they usually fall pretty drastically and pretty quickly. They don't kind of stand themselves back up. And so I see, gold down $230 and silver down $4 this morning. It's probably for the short term, right? It's probably going to
Yeah,
bounce. Who knows when? But I think people that have been sitting there eyeballing it are going to come in and order as well, and they don't really care what they're getting. And yes, we have a bunch of inventory, and we're not really hedged, so we're not as worried about the exposure. But we don't have an infinite amount, and so we've
sure.
already gone from over the last week or two saying dealer's choice. What do you want to promote? We kind of have everything. To we have kind of deep pockets on two or three things,
Right.
and that's about it. And not really sure I want to give away the farm because then I'll have nothing available really to ship, and it'll be oddball stuff. So there's inventory available. If you're just a little bit more clever on the wholesale side, you kind of go from looking at 1 ounce gold, which is always super popular, and whenever you have the big institutional money buying, that's what they want: 1 ounce and larger format gold. Fractionals they'll never touch.
Yeah.
So fractional stuff is available for a lot of the people looking at it. Gold at 41.50. Fractional actually
You can
sounds
just
pretty
swallow
good.
that.
That's more
Yeah.
affordable. So that is kind of where I would point people. 90% continues to be available, as we've talked about in the prior video reference that. That's a short-term thing. 90% in the past has traded up whenever there's a real supply crunch, up to $7 over spot, if you can believe it. We provided that quote to a retail customer for a big batch. So it goes from trading back a spot to $7 over. That's just that market. Pre 33 is available
Yeah.
because it trades similar to 90%. It's
You might
all a
explain what
secondary trade.
pre-33 gold is real quick to people that don't know and why they should be interested in it right now.
Pre 33 gold is U.S. currency made or produced before 1934. So it's 0.917, I think, ounces of gold per coin. It's the $20 Liberty, $20 St. Gaudens. They're very popular. You'll see them on our deals page. And then they have $10 pieces, which are basically closer to half ounce. Then they have $5 pieces. So it's still U.S. gold. It's just 100 years old, basically, at this point. But it's traded as bullion, generally speaking. But of course, they can't make more of it. They stopped making it in 1934. So it's all a complete supply and demand dynamic. And
Mhm.
so those things have kind of been a little bit ignored as people in this short term 2 week thing, as people are looking towards, I got to have my gold bars. I got to have my gold eagles, my gold
Yeah.
maples, maybe my gold Brits. And so those are still available at relatively cheap premiums because it's all a factor of if you have it, if you're willing to make a bid on it, you can kind of get it for cheap. And then you can turn around and offer it for cheap. These are short-term windows
Yeah.
that these are going to be available for probably discounted rates because whenever bullion's hot for an extended amount of time, both 90% and pre 33 trade at premiums that are higher than gold and silver eagles, basically.
Yeah. Yeah, I mean, we've seen historic premiums in the past, but right now or last week you saw historic premiums in India. Basically, as the premiums start to go up on all these other products, people are going to organically rotate into
Yep.
the junk silver, the 90% silver,
Yep.
the pre-33 gold, and essentially that's going to wash that market out as well. So that is kind of the buy right now. If I'm looking at everything, it's like, okay, well, those are still relatively cheap to spot.
Yep.
That's what I'm going to be interested in right now with everything else kind of going up. And we're in the beginning phases of this, so we don't know how high. We saw silver eagle premiums go as high as $30 over an ounce in 2023 when Silicon Valley Bank collapsed. We're not there, obviously, yet. But you certainly can see a pathway to silver getting that expensive again, mainly because of the
Mm-hmm.
new production that cannot come into the market, right? This is a thing that we had this during COVID because everything was shut down. In 2023, they were producing as much silver as they could.
Yeah.
Right now,
Yeah.
they can't, they're stuck. Their hands are tied on silver production.
Yeah. There's a key distinction here, too. All these major producers of products. So we talked about the secondary market, how that comes in. That usually pulls down premiums. You can buy it while it's available, and once it's gone, it's gone. You can't make more secondary product. The new stuff is usually the answer. Well, all the
Yeah,
producers of the most amount of new material have already asked all their customers across the world and in the US, tell us how many you want for the next couple months, and that's how much we're going to give you if we can, and that's it.
that's it.
So let's
It
assume that
doesn't
this
matter
demand
if
wave
demand goes
continues.
up or not. That's it. Yeah.
So in this environment, let's say it continues, then premiums are just going to have to go up to respond to try to slow down the sales for whatever it is they think they can get. And we've already seen that with U.S. Mint Silver Eagle prices. The U.S.
Yeah.
Mint asked for this commitment over a month ago from their broader network, and people put in for what they were going to buy for all of October, November, and December, and it was a small amount of coins. And so, shocker, we have demand wave come in, prices have to go up. But all these other major players have already said, "Tell me how much you want. It's a firm commitment, and we're going to make that." But let's assume that people don't put in for enough because we never can and never do. To be honest, all the market participants, then that's going to have a very predictable impact on what's available. All these things being delayed, prices going up. Oh, I would need a quote for 50,000 ounces of silver. I can't do that. I can quote you on 5,000 ounces of silver.
Yeah.
That whenever that type of thing starts happening on a wholesale basis, huge red flag.
Yep. Okay. Well, you heard it here first. So currently, I mean, we said last week premiums are going to go up. We're already seeing that. We're already seeing 7 to 10 delays is quite a long time. Is there like what's a delay in a normal market ever? Do they even have delays?
I'd say zero is a normal market, and sometimes people have so much inventory they're willing to give you basically a negative day delay and park some
Yeah.
inventory at your building, saying anytime you want it, you can
Just
wander over
get it.
and just happen to grab a hold of it, and boom, we sold it to you because we want to just generate a sale. So yeah, it's going to move in that direction. The biggest players are kind of spoken for in terms of production. They're
Yep.
certainly not going to produce any extra just to cross their fingers. They're going to find someone that wants to take it. That's not the environment we're in, and so everything is kind of getting worked down to the bone, if you will.
Yep. Um, so sizable delays, premiums going to continue to go up, and we'll have to monitor the situation and see um, maybe if they get metal over to London, if they get silver over to London, maybe that helps. I don't think this is this is not going to cure itself in the next 2 to 3 weeks. I don't see how it does.
No, there's a lot of selling back, but that's just not near enough material to actually
To meet
impact
the
anything.
demand we're in.
Yeah, and so the local stuff is really interesting. Say you're trying to take some material you have and sell back locally. Well, those guys have a completely black market on silver spot or gold spot right now because there's no outlet for them, so they don't really care what spot says. They have to
Right.
be able to buy it way back a spot and sell it probably still back a spot just because though they can find
Yep.
someone to actually turn this to. And so it's kind of a real pick your strategy and just ride it off into the sunset because you're kind of on your own. And shelves are getting more and more empty on our type of level of the business, and so we have ways and opportunities to bring some stuff in, and we're doing that. But you and I have talked about it before. Whenever people come into the market, whenever the average Joe, if you will, watching one major business media piece and comes in and says, "I want to buy gold," they don't really care. And I had a conversation last night with someone who operates one of the biggest wholesalers. He's like, you wouldn't believe the amount of kind of big institutional money that we've had coming in just in the last week, like
Yep.
big tickets. And those, my opinion is, and I wouldn't know because I don't have the purchasing power of those guys. They don't really care what the price is. They just know they need to have gold or silver, and they're just taking it all. And so that's another massive undercurrent here. Is like there's still institutional money, family offices, whatever that's still starting to roll in. That's why I say we're in the early
Yep.
stages, is because they're just going to take whatever is available, and it's gone.
Yeah, it's kind of scary to think about, honestly. But yeah, let's put a pin in it there. That is a good point, though. We do have an upcoming podcast with the Royal Canadian Mint, and it makes me think of one thing Lauren said. He said those guys they're not thinking in ounces, they're thinking in dollars. So they'll come in and just buy the dollar amount of gold, which is sucking even more inventory out of the physical, leaving less inventory for all of us to work with. So we'll monitor the situation and keep everybody updated.